Good evening, everyone. Welcome back to the channel. There's the camera now. Okay, so this is going to be the post-J interview live show. We'd like to get as many of you in the Discord to chat live as we can. That will definitely make it more fun. But I'm going to react to how the interview went, my thoughts on it, some questions that maybe didn't get asked, and we'll go through some of the Discord, and we'll also cover some of the new funds that are coming, which I've also covered in a couple other videos, but we'll cover them here again today. So, alright, let me just add a thumbnail to this video, and we'll get cracking. Yeah, so let's see, Brandon G, glad to, I guess you caught us live for once. I'm not sure if you're in the Discord or not, but if you'd like to join the voice chat, definitely feel free to. Here is the YieldMax screen. I'm not sure why I had that up. Oh, let's see. Let's go over Ulti again while I have everybody on here live. And what's really neat about this tool that I'm using is that I can share all my screens because it's truly a desktop tool. So, let's go through the holdings again in Ulti to start out. This is really going to be just a free-form discussion tonight. Don't expect much as far as, I guess, organization. This is just an informal live show that's supposed to be interactive. Alright, here is the thumbnail here. There we go. I had to redo it because when I went from StreamYard to Streamlabs, the camera wasn't configured properly. I have to close one in order to use the other. Okay, let me show a spreadsheet here. This is actually all the holdings again for Ulti. Let me do this. So we've got Affirm, we've got ARM, Chewy, CLSK, Coinbase, Carvana, GCT, Groupon, Labu, Marathon, MDGL, MNMD, MSTR, NNOX, Riley, Riot, Root, SMCI, SNDX, and Soundhound. Soundhound is actually doing great. This shows the whole dollar amount of the positions here. If we look, I think it's already up to, if this is in millions, 13 million in both, and it's brand new. Unless they're waiting, unless it's actually higher. Anyway, so I got a commenter that said that the way that they're trading in the Ulti fund has actually inspired them to do some of their own options trading in their personal account, doing 2 calls at a different, spread out at different strike prices, which would be like a call spread, a put at the same strike price, and they said they collected like 3,000 of premium, or so the comment said. Let's see here. Alright, we've got Chuck on. 100-fold says, just came across your channel last week, great content. Thank you, I really appreciate that. I can't say not everybody agrees, but I guess 95%, and 95% is good numbers, so we'll take that. Let's see, I love Ulti. Jay can play as much as he wants. It's a true test of his trading. He has freedom to pick pretty much anything daily, correct? Absolutely, so they said they've already balanced out of half of the stocks that are in the Ulti fund, which is really interesting. Alright, let me go to Discord. So I'm in the voice chat in Discord. Let me just do at everyone here. It's going to take us probably a couple months to really get this rolling. I know I'm not on a schedule yet. I am working on that. I'm posting every day, so hopefully that somewhat makes up for it. So feel free, for any of you all that are on, definitely feel free to join in. We can discuss anything we want. One thing I pointed out today in the wheel strategy, word to the wise, if you all have sold any puts or any covered calls, if you're in the money on that, I learned this lesson the hard way on one of my first trades. By Friday of the expiration date, if you're doing weeklies, by the expiration date, you can get called away before the market even opens. So I posted this in the Discord here for everyone's benefit. Let's see what else we got here. Oh, that's funny. Okay. Yeah, so the Discord is growing. We're up to like 100, almost 190 members, which is awesome. And okay, let's continue here. So I wanted to look at, here's Ulti again. They declared a pretty good dividend for only being public for less than 2 weeks. The dividend was pretty awesome, I would have to say. Expense ratio, they cut a 10 basis point break in the expense ratio. And we were up today, 41 cents in the fund. So that brings us to, we're up 30 cents net over the opening. Let's see if the dividend has actually posted here. Let's see here, dividends only. Nope, it hasn't posted yet, but we know where it is. By the way, I want to remind you all, and I'm not saying this to plug YieldMax, but it's actually 4 of 21 funds that have already paid a dividend that are actually in the red. Tesla's one. GUI, which is the Google fund, is the second one. JPMO is positive, but so 2 out of this one. I'm leaving these screens up because I like to go over this. AIYY and XOMO are the 4 out of 21. So that's like percentage-wise, 17 of 21. That's 81% that are in the positive. DISO, in terms of total return, 24%. AMDY, 46.5%. SQY, 47%. YieldMax, 9.90. YMAG, 4.55. And let's see. Appley 2.65, AMZY 35%, NFLY 21%, MSFO 28%, JPMO 16%, PP 6.86%, MRNY. I should try to trademark this. It's funny. 28.24%, MSTY 86.91%, and this is so new. This is 19 days old, so like Jay said yesterday, they picked an absolutely perfect time on that one. OARK is actually 7.73%, which is a positive return over the life of it, but I will point out you'd be way better off in S&P, NASDAQ, or any of the indexes. NVDY, less than a year, it's up 115%, but I will also caveat, you would be up way more in the underlying, which that's growth versus income. So what I would say, and this did come up with Jay, growth is what I do, and I think, I mean, I don't give recommendations or advice on here, but growth is what I would think most people would want to do with the bulk of their assets. Say you have like $1 million net worth. I would say a good 70 to 80% would be either in growth or real estate, maybe 50-50 allocation between the two, or more or less. The 20% left over is what you can speculate with. So that would be 100 to 200,000. So if you get that money, that 20% of your portfolio, the goal of income investors, at least in my book, is not to dump everything in these, but maybe 10 to 20% of your portfolio. So that would be in $1 million portfolio, 100 to 200,000, and those would go into assets that are producing a dividend. So then the goal of that, if you're part of the FIRE movement, or even informally or formally part of the FIRE movement, say, then you can get those assets that are in the 20% of your portfolio to produce enough income to replace your work income. Then you can retire early. Once you build up that level, the point is, you can't really shortcut it. I think some YieldMax investors may try to shortcut this and get there faster by saying, hey, I have 100,000, let me just put everything I own into this, and then I'm getting 80% dividends. Those may not sustain, and you have to manage the positions. But when you have $1 million portfolio or so, when you build up, and that takes time, that's not going to happen overnight. Getting rich and being able to live independently and retire early is not going to happen overnight. It takes a good probably 10 to 15 years. You can maybe shorten that if you're really good with your market timing, but it's going to take time, and there's really no way to shortcut that. But nonetheless, that 10 to 20% of the portfolio can certainly be used to produce a full-time income and then free you up to invest the rest and to play options and so on and so forth. Okay. Well, like I say, I'll just keep talking here myself until we get people to join. I expect it to take a while to build up. Like I'm saying, it doesn't happen overnight. Anyway, where were we? Oh yeah, the YieldMax returns. Okay, so we've got that one. NVDY, FBY is 43.31%. Coney is 115.84%. So that rounds them all out. What I want to do now is actually go back to just price return. So in terms of price return, let's see. So it's a big difference. PP is in the PP. It's almost minus 10%. OARK is down 34%. So of the 7 here, we've got like 2 of them out of the 7 that are negative. But still, even with just price return, Coney's up 38%, FBY is 12%, and VDY is 44%. Of course, the index is far outpacing that one. MSTY, and that's right, this one hasn't even declared a dividend, but it's up 87%. MRNY, Moderna, is 3%. Let's go to the next batch here. If there's a way to get more than 7 of these on, somebody definitely let me know. Okay, of this batch of funds, if we circle back and go back to, what was it here? Oh yeah, price return. So price return, we have a brave soul that decided to join the live stream. Who do we have? Is it Cecilia? Yes. I'm going to say it's Cecilia Runs to the Coach. Because that's your name.
I'm so brave. I'm actually thinking I might need some TSLY therapy tonight.
Really? What kind of therapy did you have in mind? Like liquid therapy, alcohol?
Well, yeah, that, and maybe like, I don't know. I think I need convincing to either like jump off the cliff or like not jump off the cliff. I'm thinking about selling my entire portfolio.
What all are you in? Is it all YieldMax?
It's all TSLY, literally.
The whole portfolio?
Well, no, like one portfolio is TSLY.
Uh-huh.
I and then the other one I have a majority of TSLY. I've like it's not a lot of money, but it's like I have probably $10,000 or $12,000 in one portfolio, and it's 100% TSLY. I've been trying to diversify a little bit.
Okay.
To like, but not much money, because it's like I don't have a lot. I've literally, it's like a freaking sieve. I've been dumping money into that portfolio for like 3 months.
Yeah.
It's like once it like goes below 10,000, I just keep dumping money into it, and it just keeps sucking the money into the freaking sieve, and I'm getting so tired of it. And now it's down to like, I kind of stopped putting money into it, and it's down to like, it was 8,000. So I think I'm down like total like $5,000 or $6,000, or maybe more. I haven't looked into it, but it's a lot of money.
So
And I
you're
have
trying.
margin.
Oh yeah, you're trying to dollar cost average down, but it's not working
Well,
because it
I'm
keeps
not.
dropping.
Yeah, I mean, I have margin. So like I have like $2,000 margin in that $10,000 account, and I'm not like reinvesting, because I was reinvesting, and then it just kept going lower and lower and lower and lower, and I'm like, I just can't keep dumping money into this fund that's going lower and lower and lower. So I kind of stopped reinvesting into it, and then started investing in other funds. But now it just keeps going so low, I just don't even know what to do. I'm at a point where I'm like starting to kind of freak out, and thinking, okay, either I just stop looking at the fund, like hide it from my Fidelity, and just do automatic reinvestment and just hide it and forget about that account,
Hmm.
just let it do its own thing, or I just sell it all and put it in something completely different to try to recoup some of my losses.
So let me ask a couple of questions then. So when did you buy first? And the 12,000, if you don't mind me asking, like what percentage of your overall net worth would that be?
Um, okay, I'm gonna log on to my Fidelity, because I can be a little geeky about this.
Yeah, we all can. That's why we're here.
How did I get so lucky to be on live?
You just happen to be the first one to join.
Well, I
Today's,
looked on your
yeah,
channel. I was gonna post something on your Discord,
yeah.
like, "Hey guys, like thinking about selling all my Tesla," and then I saw your post.
Mm-hmm.
So okay, so let me tell you my first purchase. Um, I did sell some of it because I just couldn't deal anymore.
Mm-hmm.
But so let me see. The first time I ever purchased it was August 28th, 2023.
Okay. Oh, you bought close to the peak.
And and I at 26. Oh, well, that 26.99, so it's half that. So what, like $14 or something?
Yeah, very close. It's like
So
13. Oops, my calculator's not wanting to cooperate with me here. I know I should be able to do this in my head. 1349. Yeah, 1350. That's what I said. Yeah.
yeah. But then I kept I even went up. So like my next purchase was 27.21, which is half that, and then I just like kept buying it like crazy. August, September, October, it's all I was buying.
Mm-hmm.
November, December, and I had let me see. Let me look and see. I have 500 shares now, but I had let me see what I sold. I just sold some because I thought maybe better just to kind of trim it a bit,
Mm-hmm.
um, and get into something else. I was really feeling sure about it.
Right.
Let me
So let me ask, what made you
everything.
want to buy Tesla? Was it YouTube influencers?
Yes, and also I love Tesla, so like I was wanting to buy Tesla for a long time, and I never, like, I really wanted to be in it the whole time. Like, I've been an investor for a long time, and so I've wanted to buy Tesla for a long time, but I was always nervous about it because I felt like it was really volatile, and
Yes.
I didn't feel like I could handle the downs and the ups and the downs and the ups and the downs, and I don't really have the skill to be able to look at um, the charts to determine like what's a good buy-in, when should I not buy, should I buy, and all this other stuff. And I don't know. I think it was just like all this super positive stuff about Tesla. And my daughter bought a Tesla, and I really loved it. And I was just looking. I'm kind of like Elon Musk fan girl, and I love everything he's doing, and I love all of it. And I think everybody who doesn't like him is just insane. And he's like literally like he could run for president. That's the type of person I feel like he is. He's just like he's the way of the future, and everybody else is just stuck in old, like they're just stupid old ways.
I've actually thought that too,
And
but not to burst your bubble, he actually can't run for president though, because he's not like a
oh,
natural born citizen. Yeah.
oh yeah, because he's from another country, yeah.
Yeah, South Africa.
But
Yep.
you know what I mean. Like,
Oh, I
but I
know.
mean,
Absolutely. Yeah.
I love him. I think he's great. I love everything about him. I think he's a great person. He's kind, and he's compassionate about people, and children, and
Yeah.
the community and the world and all that. And I love everything he emulates, right? So I'm like, okay, well, why not buy into this? Because this freaking company is going to the freaking moon.
Mm-hmm.
And then I started watching all his videos about like his like what Starship or whatever his
Oh,
rocket
Starlink.
company is,
Or yeah, the
Starlink,
rockets.
and
Yeah.
I was like, that's freaking cool. And then I was like looking at all his underground tunnel stuff, the boring company, and I was like, that's freaking cool. And I'm like, this dude, like, this is where the money, this is where it is right here. This is it. If I can just, and then I started watching all these channels about Tesla, and there's a lot of channels on about going all in, and I think that's how I found Kamir's channel.
Hmm.
And I didn't really know about the high dividend funds until I found his channel. But I had already been investing in like Tesla stock, right? So when I found out about Tesla, I was like hooked. And I was like, this is freaking awesome. I love this. And I kept buying, 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 buying. Every single dime I had, I bought more shares, bought more shares. I literally sold everything I had in my Roth account and I started buying Tesla. I I mean, I don't have much in my Roth, but I probably have about $20,000 in Tesla in my Roth and another 10,000 in Tesla in my brokerage account. And and thank God I can't do it in my 401k because I probably would have sold everything and bought Tesla. And
Hmm.
now I feel like that I feel, and maybe this is what I need, like assistance with psychologically. I feel like I've made the worst decision in my life. Worst like financial decision in my life was to buy this, and I've lost thousands of dollars. I've even took money from my credit card to fund Tesla. I took money off my Navy Federal credit card to send to my Fidelity account to buy more Tesla. It's
Wow.
like an addiction.
Well,
Yeah.
so
So I like
I can console you a bit, but I'll speak, from reality. So I think that Tesla will recover long term. How long that takes is anybody's guess. But I have some Tesla stock too. I have a lot of Tesla myself. I'm kind of bag holding right now because I'm very
yeah.
stubborn.
I
A lot of people in the community are selling now, but um,
yeah.
I look at it and I'm like, yeah, Nvidia. If I'd have bought Nvidia at the same time, I'd be way ahead of the game. But
Oh yeah.
like I was just saying before you joined, if you take like $1 million portfolio, I think 10 to 20% of the portfolio is good to look at for dividend investing. If you're part of the FIRE movement, you can create enough income from that percentage of your portfolio to replace your work income. Then you have the other 80% that's in index funds, growth stocks, things that
Yeah.
are going to constantly appreciate over time.
Yeah.
But since day one, I've always cautioned against anyone putting like everything they have into these, or at least I've tried to. When I first saw like the 70% annualized dividend yield, I went nuts myself. I was like, wow. And then I looked at, I'll actually show you here in Seeking Alpha, I saw the first few months of last year, it was actually tracking with Tesla. In fact, it was, let's see, can you see my screen by chance? If not, it's okay.
Um.
So like
So where are you? Oh,
March
okay. Let me see if I can figure
when
out where I'm
I
looking at.
first, you don't have to see it, it's okay, I'll say it and you can watch the playback. But when I first started um, when I first started looking at this, I was seeing, wow, it right here, March 20th, it was actually outpacing Tesla, and it was paying somehow a 70% annualized yield. And then here they kind of went back and forth. There was a couple of days in that first quarter that they were performing almost identically, which I thought was too good to be true. But then I started covering it on my YouTube channel, and I've been a YouTuber since 2021, but nothing took off like these funds. And I was like,
Yeah.
wow. And then all of a sudden, we got into April, then Tesla had a bad earnings, but they were still tracking very close. And then until June, when Tesla started to have a huge run up, Tesla was in the positive too, but there was a big disparity between the two. Like by mid July, Tesla was at 68% and Tesla was at 23%. Even though they were both in the black, there was just a widening disparity. And then as we got into September, one was staying around 50%, the other one was finally in the red. And it's just never recovered from there. But what it would take, like Jay said yesterday, um, he expected that Tesla would be a more volatile stock, which is exactly why you said you didn't want to get in it at first. The volatility should typically
Yeah.
help the underlying. That hasn't happened yet, but I do think it'll recover within the next 1 to 2 years. If it gets back to where it was, I think Tesla will slowly creep up as well. Now, by no means am I saying that's a reason to
But
stay
here's
in.
the problem.
Yeah.
I'm concerned. Like So I mean, I figured that like it's going to eventually go up, but the problem is that it goes down so quickly that already like it's doubled, and now it's already going down again. And then it's just going to be so low again that they're going to half our shares again. And
Hmm.
then, well, we're just going to keep getting, half shares. We're just going to lose all of our shares. And then eventually I think it'll go up. But I kind of feel like it's better to get out of it and then wait until it completely bottoms and start recovering to then maybe get back into it and then ride the wave at that point. You know what I mean? Rather than holding on and staying in it and riding it out. You know what I mean?
Hmm.
That's kind of what I was thinking. Is that just get out of it, maybe ride the wave with one of these other funds. Like, I had Coney. I kind of sold out of Coney because I made a little bit of money. But the Misty, I don't know if it's too late to get into that, or Nvidia, I feel like it's too late to get into that. But I kind of feel like maybe it's time to get out, and because I think it's just going to keep going lower, lower, lower.
Yeah, that's not
I
a
don't
bad
know.
idea. Like if you were timing it or trying to, and then there's actually people in the Discord that have done that. They got out and then they waited for it to, come to a price they wanted. Then they got back in. Then it went up. It's not a bad idea.
Yeah, I mean, I hate to lose all that money, but
Hmm.
I feel like eventually it's going to go back up. I mean, obviously it is. I mean, I think this company is going to be, it's going to be huge, and they're going to rule the world eventually. That's kind of how I feel in the future.
Yeah, I for sure agree. I definitely don't think they're going anywhere. But let me see if you. So you mentioned your account that you have. Is it like I would hope. I mean, if it is, it's okay. But is it like the majority of your holdings, or do you have like a 401k and other stuff
No,
too?
well, okay, so I have the 10,000 that actually was my emergency fund.
Oh, okay,
That I put into Tesla. Yeah. So
okay,
that was sitting in cash, and I decided, okay, well, I'm kind of done just letting it like in SPACs. I'm in Fidelity, so I was thinking, okay, I'm kind of done in SPACs. Like I just want to like make more money, and I was really trying to grow my dividends, my annual dividends. And I thought, well, maybe I'll just stick it in there, eventually. And that's all I was buying at the time. Like I was 100% in that account until I figured out I probably need to diversify a little bit. So now I've diversified into other funds.
okay.
Um, so my Roth, I probably I had about 30,000 in my Roth, and a majority of it, I had in VTI and SCHD.
Oh,
And I
perfect.
sold out, and I had REITs, but
Mm-hmm.
I sold out of all my REITs, and I sold out of all my SCHD, and I sold out of all my VTI, and I bought into Tesla. So I've kind of like
You sold out of some better
shot my
stuff to get into Tesla.
yeah, I kind of shot myself in the foot,
You're not
right?
the
So
only one.
now,
If it makes you feel any better, I
and
sold out of Esville to get into some Tesla.
yeah, I
Yeah.
did that too. I had a bunch of SFAL, and I sold out when they raised um their fee,
Mm-hmm.
and I thought, oh, that's stupid. I'm just gonna sell, and then I just bought a bunch of Tesla. Anyway, so now I'm trying to like remedy the situation by getting back into other funds, and I do have some other funds in there, but I'm several $1,000 down on Tesla in that account. So I have my 401k, which is in 100% S&P 500 funds, which I'm not going to switch that. I mean, I may switch it and switch my allocation to potentially like maybe like 5 or 10% in small cap funds, because I think that small cap funds are going to do really well
If you're looking
here
for a
in a
small
little while.
cap play, TNA is one that I got into. It's the Triple X Direction Daily Small Cap Bull.
Yeah, but like, does it go down triple like when it's down?
Yeah, but if you think small cap's going to do
Okay.
well, then it doesn't matter.
Yeah.
Just like,
Okay.
and I tell a lot of
So,
people this. So if you look at the S&P 500 for the last 12 years, and I'm not telling you what to do, but the S&P, we had like the longest bull run in history, and so the S&P was up. Here, I'll pull it up right here. On average, we did like, depending on how you measure, it was like 15% a year, right? So yeah, over the last 10 years, right here, 174% rate of return. If you just divide that by 10, just in terms of simple return, that's 17.4%. So then, if you're in a fund like UPRO, and I know some people may disagree with me because they think there's extra risk in these, but a fund like UPRO, look at this, it did 724%. So yeah, there's certainly downside risk. Like on this chart right here, there were 3 times, actually there were 2 big times that it dropped significantly. COVID from February 2020 all the way to March, it went from $40 to $10, so it 4x to the downside. But the thing is, you're a long-term investor, right? Or
yeah,
you okay.
absolutely.
Okay, so then
Yeah.
that wouldn't have phased you if it dropped there. And then from December 2021 down to the bottom in October 2022, the fund went from 76 all the way down to 28. So that was a huge drop. But if you zoom out over 10 years, 724%. So what's that? That's like annualized.
Yeah.
That's like a 72% per year.
Yeah, that's awesome.
hmm So yeah, in that case, it's triple X potential to the downside, and you can also look at, they make inverse funds for these too, like the Nasdaq one, the T triple Qs. It's the same fund family. It's a 3X leveraged fund, but they make the SQQQ, which is inverse. So if the Nasdaq starts dropping, then boom, you've got your downside protection right there.
Yeah.
hmm
Yeah, if you could make a video on that, that would be so cool
hmm
because it would be, I've considered those funds, but they're a little scary,
Yeah.
They're a little scary to get into because you see them going certain ways. But like if you explained it, I think it would be much easier to kind of like grasp the idea and be okay with it.
hmm Yeah, like kind of like I just explained on here, right? Like that, but just a
Yeah,
separate video.
absolutely.
Yeah, yeah, because
Yeah,
what
just
it
kind of
is.
like how,
hmm Go ahead.
yeah, like how to, how if you want to kind of protect your portfolio or you want to kind of get into something that's alternative that would, help you to not lose so much money, because I don't really feel like I have anything in place to
hmm
protect myself from downside risk at all.
Yeah,
I'm losing money every day. It's like a freaking sieve.
right.
Terrible.
Yeah, so it all depends on like emotion. If you look at the long term picture, the short term fluctuations won't matter.
Yeah. Well, that's why I was saying like maybe I just like hide that account from view and then I don't look at it. Set it on set it on auto, and then not look at it and just go back there in, 2 years and I
hmm
might be surprised at what it looks like.
Absolutely.
But when I look at it right now, it kind of, I don't need the money. So here's the thing. I don't need that money.
hmm
It's only like $10,000. I
Right.
don't need the money. I don't need it for an emergency. I've got other money for emergency. I don't need the money. So it's not like I need to sell it or I'm freaking out because I need the money because I don't need it. I have
hmm
other money in cash where I don't need that money, but I just hate to look to see that it's like going negative. You know what I mean? Like badly. Like I've never experienced anything this bad in my all of my years of investing.
Yeah, no, I see what you're saying. There's a book, I believe, called The Psychology of Investing, and we'll tend to notice as investors, we notice the bads more than the goods. And I see that a lot. Like, you could have a portfolio of like 30 stocks, 29 of them could be up, one could be down, and you'll look at it and say, darn it, that one is down. But you could have some of them that are like
Oh
way
yeah.
up. And I've even done it myself. It's caused me to sell out of stuff too soon. But I found that,
Yeah.
like, do you tend to sell stuff at a gain? Do you have like a certain threshold? If it's up, say, like 100%, you say, I'm going to sell this?
No, I just hold on to everything.
Oh, okay.
I'm buy and hold, buy and hold, buy and hold. Like I literally like all last year, all I did was buy SCHD. That's
Mm-hmm.
it. Not last year, but the year before. All I did was buy SCHD. It wasn't going up, wasn't making any money, wasn't making any like barely any dividends. All I did was just I just didn't care. The market sucked. I felt really like it was horrible. And I was like, okay, well, I'm just going to put money in SCHD, buy more shares, buy more shares. I had so many shares of SCHD and it was just doing terribly. And then this last year, everybody sold out of SCHD because it was underperforming. And, I just bought, 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 bought. That's all I did.
That's
But it's boring,
The Schwab one. That gets a lot of coverage.
Yeah. Yeah, and it's like, they had it's like a 3 point something, almost 4% yield,
Yeah, I'm glad you
and
brought that one
it
up,
pays
actually. Yeah,
every 3 months. It's terrible. It's terrible.
it's a low
It's
yield.
fine if you've got 30 years and you start when you're 25 or whatever,
Hmm.
and you got 30 years to invest and that's all you invest in, you could potentially like, do really well. But for someone like me, I'm 51. I'd like to retire when I'm 59,
Hmm.
and I'm kind of on track to do that when I'm 59, and maybe possibly sooner. Like with these funds, I was thinking, gosh, I might be able to retire when I'm like 56 or 55
Right.
with these funds. And I think that's what really, really, really like ex- made me excited,
Hmm.
was that I'm kind of done working. I've been working my whole life. I want to go ride my bike. I just want to travel. And that was what was so exciting about it, was that here's an opportunity to buy all these high dividend funds. But like I don't think I could like literally retire and have this portfolio that just keeps losing money. You know what I mean? Like
Right.
that would not make me feel good in retirement. That would make me super stressed. I would feel like I had to go back to work or whatever, to recoup all my lost money.
Do you know options at all?
I would love to do that, and
Hmm.
I am in a position where I could do that from a financial standpoint. I just really kind of a visual person, and I've watched like a million YouTube videos, but I
Hmm.
think I just need to sit down with someone, and that's kind of why I got into these funds, because I want to do that, but I just don't really like when I go in and look at it, I'm like, yeah, I don't know what I'm doing. I need someone to sit next to me and say, this is what you need to do, and these are the buttons that you need to press, and all this other stuff. You know,
We could do that on
like I'm a
a
visual.
live show. That's actually what I
Yeah,
want
I
to
mean,
get going in here.
so I would 100% do that on a live show with you with my account,
Hmm.
100%
We could
with
bleep
my
that
money.
out, of course. Yeah, I mean, no,
Yeah,
no, like personal info.
absolutely, we
Hmm.
could do that, because I do like I thought about like going to Fidelity
Hmm.
and sitting with them and seeing if they could like talk to me about that, but they're so weird about that kind of stuff. Like they're like they don't want to give you any weird information, or
They're afraid to
give you
come,
any.
like, yeah, like they're giving
Yeah,
you
they're like,
advice. Hmm.
yeah, they're so weird. Like I've had a lot of experience with Fidelity in the last couple of years because I've taken over my parents' accounts,
Hmm.
um, because they're older, and I'm their power of attorney and all that.
Yeah.
So, but they're kind of weird, like about that kind of stuff. And they're like, they're so conservative, and it's like, they're just kind of generic,
Mm-hmm.
and they don't, it's not like, I don't think I could go to them and say, hey, I want to I want to learn how to trade options on Tesla. Like
Mm-hmm.
I don't think they would like sit down with me and teach me that. You know what I mean?
When it was Ameritrade, I had someone that I called. They actually walked me through one, but normally they want to charge like a broker fee for it, I believe.
Yeah. Well, we could, is it TSLL is what
It's an inverse one.
OR. Yeah, a lot of people are doing that one. I mean, I'm happy to learn how to do any of them. I mean, I'd be happy just to learn how to do an option trade on my TSLY and maybe make a little bit of money.
Oh, I'm sorry.
If that's
TSLL is a 1.5 bullish Tesla one. I actually made money on this one last year. But yeah, we actually did you watch the whole interview with Jay yesterday?
I watched I actually watched a little bit, and then I was kind of busy last night, but then I listened to some of it while I was like in bed in the middle of the night, and I'm like, okay, I just gotta focus and watch a whole thing. So I was gonna actually watch it tonight.
Mm-hmm.
But I think yeah, I feel like is it Retire on Dividends who does option trades on TSLL?
Yes.
Is that right?
Yes. So
Yeah.
there's a couple of different trades you could do. I mean, a call option is bullish. A put option is typically bearish. I'll go through some of them because we have a pretty good thread in our own Discord here. I'll go over one that I got into,
I mean,
which
I'd be so grateful to like get on even a private, not even like recorded on YouTube or whatever,
Mhm.
just to get on a call with some people to walk through some of the steps.
For sure.
Because
Yeah.
I've got money in my account. Like I can, whatever money needs to be there to cover, if I have to sell it or whatever. I can't remember the terminology, but like you have to have money to cover it if you have to like buy it, right? So I've got money in my account, and I'd be happy to like do any of those
Mhm.
options. That'd be great.
Yeah, because you can earn a full-time income in premiums trading these.
Well, that's what honestly, like that's what I was thinking that I'd like to do, but it's like when I watch the videos, and mostly all my my YouTube is just financial.
Mm-hmm.
So I've just been watching financial YouTube for years.
Yeah.
7 years. And so anytime it's about like options trading and stuff like that, like my brain just shuts off. I cannot comprehend it. I can't figure it out. And then when I go online to try and figure it out, it just scares the shit out of me.
Yeah.
So, it's just one of those things. I think some people it comes very naturally, and some people it's like this doesn't make any sense.
You'll get there.
Until you can maybe like I see a lot of the YouTubers that I've been following are doing these options trades to kind of like mitigate some of the losses and stuff like that, which is great. But like I don't know how to do that. I could do it.
Mm-hmm.
I just need someone to like either show me or walk me through it. You know what I mean?
Right. Yeah, it just takes practice and seeing other people do it.
Yeah.
Yeah.
And it's not so easy. Like when you go on, like I went on to Fidelity, and I think maybe it's the app.
Mm-hmm.
Maybe the app isn't so like user friendly, and I don't usually log on to the like website. So everything I do is kind of like on the app, and maybe it just doesn't make sense on there.
Right. That's true. Well, do you at least feel better now about investing?
Well, I mean, I'm still kind of on the fence, I mean, I think either I just need to like suck it up and realize that I'm gonna lose like a lot of money and let it go, or or
Another thing,
maybe
another thing
or
you
maybe
can do. Of course, last year's over already. I didn't do this either, but given the taxable dividends that we're getting, you can do a thing called tax loss harvesting, where you sell part of the position at a loss to offset
yeah, well
your
that's
gains.
yeah, that's what I was thinking when I sold off a little bit. So I did sell some, and I think it was like it wasn't very much money. It was only like I think it was like $500,
Hmm.
which out of my whole but one of my portfolios, I only sold 500. So, I thought maybe, okay, well, that would be good for tax loss harvesting purposes for this year. But, I think that I'll probably look at it again. I don't know what tomorrow brings, but every day it's like, it's so stressful. I think what it is, I need to stop thinking about like this, every day. It's like, every single day it seems like it's going down 3 or 5% or something. It's like, oh my God, I just can't deal anymore. You know what I mean?
Yeah, it's hard to stomach the swings in the positions for sure.
Yeah.
Yep.
So I just, I think if I had an exorbitant amount of money, I wouldn't really care because it's not that much,
Yeah.
honestly.
Yeah.
But, it's like I have 4 kids.
Oh wow.
I'm a single mom,
Hmm.
and it's like I have a lot of expenses, and my house is expensive and my bills are expensive, and I just, it's like I don't really have the wiggle room,
Hmm.
and especially with my, being my age and having to, you know like it's like the pressure's on when you get to be in your I think you're a lot younger than I am,
Hmm.
but like when you're in your 50s, it's like different when you're in your 30s and 40s because the pressure's on,
Right.
and you feel differently about retirement, and you feel this huge sense of urgency and pressure to get things moving
Hmm.
with your retirement, and if you're not where you want to be, it feels this huge weight on your shoulders. I don't know how else to explain it, and I think maybe if somebody's listening that's in my position in their 50s with a lot of kids and expenses and college and cars and big houses and things like that, you can understand. It's like you don't have many years left to make the kind of money that you need to make to be able to retire and live a comfortable lifestyle. So if you're losing all this money every day, it's like, and you're seeing it just go down the drain, it's exhausting.
Hmm.
And you get to the point where you just can't, you're feeling like, oh gosh, I can't take this anymore. I can't do it anymore, and I don't know if this is a good idea, from a financial standpoint.
Well, all the more reason
And
to
so
learn.
that's kind of,
Yeah, learn options. One story I can tell you. When I first started learning options, there was a woman that was leading one of the groups that I was in, and she was probably about your age, maybe older. And she talked to a financial advisor,
hmm
and the advisor told her when he saw her net worth and whatnot, he's like, "Well, we're just going to have to tamper your expectations about retirement." And she said to herself, she said, "That's not good. That answer's not good enough." And she
yeah,
learned options and
no,
started leading an
yeah,
options group and makes a ton of money doing it. So it can be
yeah.
done.
See, like yeah, and I'm not like I feel the same way. Like I've been told, like, oh, well, you just need to work more hours, and I'm like, no,
Hmm.
no, I just need to make more money, and I need to figure out how to make more money in less time, and quit my job in less time, you know what I mean?
Right.
And it's like that's kind of where I'm at right now. Just
Hmm.
needing to work less, make more money, and just be smarter about, what I'm doing. So right now I just don't feel so smart with my situation. So I definitely feel like options would be a good idea.
Absolutely. So just stay
For
in
sure.
here, learn from the others, and I think we can get you there for sure.
Yeah.
Yep.
Cool.
So, well, I'm going to be doing this regularly, so definitely come back on. I am going to go to. There's someone else on the line. I'm going to let him talk for a second, and then we'll come back to you for
No
sure. So,
worries. I'm just gonna chill. Yeah.
yeah, yeah. Well,
Listen.
great talking to you.
You too.
All right, so we have on. Let's see, that guy syndrome. Go ahead.
Hey, can you hear me?
Yes. How's it
Hey
going?
guys, what's up? Yeah, I joined Discord a while ago. I've been, checking out your daily videos,
Mm-hmm.
and I actually got my a buddy of mine. I convinced him to drop about like $10,000-15,000 into the FEPI strategy that I've been doing.
Oh,
And I
okay.
think everyone's biggest worry is where's the risk in owning any of these high yield covered call ETFs? It's to the downside. If the underlying is doing great and is just skyrocketing up,
Mm-hmm.
yeah, the covered call ETF, the share price is going to go up too. No worries, everything's gravy. But as soon as things start to go down, that's when people see the share price, just go lower and lower and lower and lower.
Mm-hmm.
A lot of these covered call ETFs, they will have share price net asset value erosion. I mean, I don't care anyone that says they're not going to. These payouts are so unsustainable that the only way that the share price remains relatively flat is if the underlying just keeps going north, just keeps going up and up and up. But the stock market ebbs and flows. It goes up and it goes down. Individual stocks are more prone for the swings going up and going down. So I mean, you either own a bunch of the cover call ETFs individually, or you own like the all in one, like a YMAX or a ULTY, like something that's
Yeah,
more
Ulti.
a
Yeah,
little bit more diverse. Yeah,
totally makes
but
sense. Yeah.
the fund that I chose is FEPI
Right.
for several reasons. It is highly tech correlated, which is basically it's the top 15 high liquid with options in QQQ. Basically, it's tech and a little bit of innovation. It's a lot of it's YMAG, it's YMAX, all kind of rolled into one fund.
Mm-hmm.
And what I like about it is it sells covered calls out of the money, not at the money. So it's not collecting the most amount of maximum premium, but it's letting the stock do a lot of the legwork when it comes to an appreciating market. So when QQQs go up, FEPI gains about 50 to 60% of that upside move, but it also selling high premium, high implied volatility on a lot of these tech stocks. So it is bringing in a good amount of premium. It's been paying out about 2% a month,
Mm-hmm.
but essentially you're long QQQs when you own FEPI. So I want to cover the downside risk. So I've been playing around with the different hedges and things like that, and there's a 1-to-1 inverse ETF called PSQ. Now, if you own PSQ long, just the shares, when QQQ goes up 1%, PSQ is gonna go down 1%. So it kind of negates it. So I've been looking at the options. It doesn't have weekly options, but it has monthly options. But what's great about PSQ is it has ridiculous skew when it comes to the calls and the puts. So
Mm-hmm.
if you buy a vertical, let's say if you buy, I've been posting pictures in Discord, but I want to make money when PSQ goes up, which means the only way I'm making money in PSQ is if QQQ is going down. Now, if QQQs is highly correlated to FEPI, or vice versa, FEPI is highly correlated to QQQs, I want to somehow cancel out the directional risk of FEPI. Now, what's good about FEPI is it offers a little bit of positive delta. So when QQQ goes up, FEPI is going to go up a little bit, which is fine. That's exactly what I want. If FEPI went down all the time and just had NAV erosion, the strategy wouldn't really work to hedge with PSQ. So what I do is I buy and or sell an at the money vertical once a month in PSQ. And this negates the downside risk of owning FEPI. And I've been posting pictures. I can get a double-digit downside hedge every month owning FEPI. So if QQQs drop 10% or 11% or 12%, I don't lose $1 because I'm hedged with PSQ. and I still collect the 2% dividend a month that FEPI's going to pay out regardless. That's the only guarantee, is that I'm going to get paid with FEPI at least once a month. It could vary, 1.9%, 2%, 2.1, whatever the distribution is going to be for that particular month. But I don't care about the share price going up in FEPI. I'm not in FEPI to sell it at a higher price. I'm in FEPI for the distribution per month. If that's my main goal, I only need to worry about the downside risk, which is just hedging QQQs.
What's your opinion?
So
if you like these inverse funds, do you like the SQQQ or SQQQ?
The problem people are going to run into with SQQQ is it's leveraged and it has a decay drag that's built into it. So if you just own the long shares, the share price is going to go down over time pretty much no matter what, because the way it trades the options to get the leverage, there's going to be like the cost to carry over time. But PSQ is a 1-to-1. Now with SPY, it's going to be SH is the 1-to-1 inverse. So the reason why the hedge works with PSQ is it has a funky call put skew because it is an inverse, and when you do up a vertical spread at the money, the max loss on the vertical spread is always going to be less than the max profit. So it's going to be a little bit offset. Now, to get the sizing right, I mean, the picture I showed is a little bit over 200 shares of FEPI, and it's about I think 6 spreads at the money of PSQ. But you can play around with the volume to get kind of the neutral deltas. But the overall idea is I want to be hedged for a double-digit sell-off. If tech sells off 10%, I don't want to lose $100,000 on $1 million account within a matter of 2-3 weeks.
Right.
I mean that's a big hit, losing $100,000 on $1 million. So if you have $1 million in your account, and you probably should spend a little bit of the money to hedge. And on top of this, I do have a black swan hedge that's like 6 months out. It's just a few put verticals and QQQs way out of the money, like 25, 26, 27% out of the money. It's relatively cheap.
Okay.
But the only guarantee is I'm getting the monthly distribution from the covered call ETF, which that's the whole idea. The only thing I ever have to worry about is QQQ selling off. Now, if you're in Nvidia, if you're in any other tech covered calls, you still got to worry about QQQ selling off because they're all kind of rolled into that same ETF. They're highly correlated to the NASDAQ 100.
Right.
So my solution of trying to hedge the max pain of owning, for instance, FEPI, would be trying to find a way to hedge the downside. I played around with a few things, but it just seems like PSQ at the money verticals rolled every single month, I think, kind of work the best. It just fits perfect. But the fact that FEPI has positive delta when QQQs goes up makes the strategy work pretty good. I played around with a few numbers on QQQY. QQQY does have options as well. You can get kind of the same kind of hedge per month with QQQY by doing a call vertical that's bearish. So when QQY does drop, the call vertical is going to pay out. But QQQY barely goes up, Right. So the same concept will kind of work with QQQY, but it works. I think it works the best with FEPI because it does have that asset share price growth when QQQs goes up. Like it doesn't just depreciate no matter what kind of thing.
Because QQQY has done nothing but go down since it's been public. Yeah.
So I'm sure if somebody back tested, for the past like 4 months, however long QQQY's been since inception, if they sold or if they bought an at the money call vertical bearish in QQQY options, how much that vertical would have paid out per month based on QQQY's just dragging down, Right. Like it doesn't work for every underlying because it needs that call put skew for the vertical hedge, you need to make more money than you're going to lose if the underlying does go up, kind of thing.
Mm-hmm.
And it just seems like FEPI pays enough per month that you can spend 10% of that monthly dividend and put it in Black Swan hedge or VIX hedges per month, kind of thing. You know,
Right.
if it's paying 2%,
Well, I see it.
You can take 10% of that 2% paid out and hedge with it.
Right.
It pays out enough that it's worth it, in my opinion.
Mm-hmm.
And I've studied SPX by a ton. About every 3 years, on average, almost like clockwork, on average, there's going to be a 20% or more sell-off in the S&P 500. And if the S&P 500 sells off 20%, usually QQQs are selling off around 25, 26, maybe even 30% kind of thing. So if you're in these funds, cover call funds, all year long, 100% of the time, you will encounter that 30% sell-off every single time. There's no avoiding it because it's super hard to time.
Right.
So if you spend a little bit of that income per month and hedge for that 25, 20% sell-off, when it does happen, your whole account that should be big at a certain point is not going to draw down 20% in a month,
Mm-hmm.
And there's various ways to do it. I posted a Tesla hedge. It's an inverse stock collar. The only problem is it just takes up buying power, but it does hedge to the downside, and it is zero risk. So it's just an option out there,
A collar, you said?
Yeah, it's a stock collar, so you own the long shares,
Mm-hmm.
but it has a vertical overlay on it, so it makes money in a bearish direction. But if you can fill it for around that price, it's impossible to lose money on it. It just takes buying power. And if you have margin, you can own Tesla and get the cover call income and do this Tesla hedge with the options, with just the margin and everything, and it should pay for itself.
That's awesome. You should explain some of these trades and the options threads we have. Like we have the learning options threads and we have the wheel strategy. Definitely explain some of these.
Like the Tesla.
Yeah.
The Tesla arbitrage hedge, it usually has to be done like 4, 5, 6 months out in time to get that put call skew.
Mm-hmm.
But usually, like what I posted, it'll probably fill within maybe 10 to 15, maybe even $20 of that mid price right there.
Mm-hmm.
And you just let it sit and exit a little bit before expiration, and that's pretty much it. But it will give you that few $100s in the downside, but you cannot lose money if that fills.
Mm-hmm.
It's 100% impossible for you to lose money if that spread fills at that price.
Mm-hmm.
It's a free hedge if you have the margin to do it.
Awesome. Yeah, post the details of that in one of the subthreads. I think a lot of the audience would benefit from that.
It doesn't work on every underlying, but I mean, I suppose as long as the underlying is super correlated to like QQQs, I know it can work on Snapchat. You can get this arbitrage kind of collar on. Palantir, you can get the arbitrage collar on. The only thing that sucks is it just takes up capital intensive. That's it. But it's a risk-free hedge. I mean, you get what you pay for.
True.
Now, if I owned a bunch of Tesla
Mm-hmm.
and I had a margin account and I wasn't using the margin, I would totally go with options and do this arbitrage play.
Yeah.
Because then you can hedge Tesla to the downside, and you still get the monthly distributions no matter what.
Mm-hmm. Do you own any YieldMax at all? I'm assuming not.
No, I got out of all that. I used to own Asphalt for a while, but then I just realized it's hard to beat the FEPI with the monthly hedge. The only other thing that I own is KMLM. It's a managed futures it's a non-equity. So historically, when equity sells off, KMLM goes up,
Mm-hmm.
and I'm basically holding that just as cash, and it pays 8% dividend once a year in December. So I'm only holding it in case equity sells off a ton. Then I'll exit KMLM, and then I'll just buy FEPI again with more buying the dip kind of concept.
Oh, this one you just mentioned. I don't know
Yeah,
if you've seen, but the S&P and this one appear to be moving in opposite directions within the past 4 months.
for KMLM.
Yeah, because the S&P keeps going up.
Yeah.
KLM's actually going down.
Yeah,
Well, yeah.
it is kind of inverse, but it's when S&P still like rallies, it stays relatively flat. It's a managed futures. It uses like moving averages algorithms, and there's one good video on YouTube I think on it.
Hmm.
But I like it because it's non-correlated to equity, and it's just a placeholder for cash that's buying the dip, and
Okay.
it just happens to pay 8%. So I
Oh,
got roughly 15% of my account in KMLM, which is you can put it in short-term treasuries. That would be kind of the same thing.
how
And
does
then
it pay?
I got the 80
How does it
85% in FEPI.
how does it pay its dividend?
It pays it out once a year in December, I believe.
Oh, so it's like a long-term capital
And
gain distribution.
yeah, it's like it
Okay.
pays out like 8.2%, 8.2%, I think.
Oh, here it is. Okay. Did they miss last year, or maybe this just hasn't updated?
Yeah, it probably doesn't have a distribution date for 2024. It
Hmm.
might. Let me check my other account.
Okay. Anyway, yeah, that's one I've never heard of. Um,
Yeah,
but
it's managed futures. If you look at the charts, every time there's been a market sell-off of 20%, KMLM has gone up like 30-40%.
very interesting. I'll definitely have to check
And
that
and I
out.
use I use that as, yeah, instead of investing all my money in like a high dividend fund, or a covered call ETF,
Hmm.
I have 15% of my cash in that.
Awesome.
Yeah, KMLM does have it's showing up as December 2024 for its distribution date.
Okay. Yeah, I'll check that out. I'm gonna move on to the next person waiting real quick, but I'll come back to
Yeah,
you
yeah,
once they're done. Yeah.
good
Good.
stuff, good stuff. Yeah,
Absolutely.
enjoy.
Yeah. 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 Stay on, and yeah, if no one else on, we'll circle back. Okay. Thanks. Okay, we've got Gajin on, who also just joined the Discord. You want to go ahead and unmute yourself, and we can chat. If you can hear us, yeah, just unmute your mic. Let me see if he direct messaged me here. He just joined from another Discord, actually. I would be most interested to talk to him. We'll give it a second here. While we're waiting, I think we had two others that dropped off. If you guys want to join, let's see. We had who was it? Wild Giraffe was on, but he dropped, and then we had another person that was on that had dropped. Let me check something here. Okay, Gajen, are you gonna unmute your mic? I don't want to wait too long here. If not, I can just talk back to that guy Syndrome again. One thing I did want to point out about YieldMax, like I've mentioned, if you look at total return, only 4 of them out of the 21 that have actually paid a dividend, only 4 of them are currently down in terms of total return. So that's definitely interesting. Oh, he's trying to unmute his mic. Okay. So, Gajin, if you can hear, it should just be the bottom left corner. There's a mute button. You just unclick that with your mouse. And if you have a mic set up, you should be able to participate in the live. I anticipate we're going to have these kinds of things in the first few months of the live show. Discord's not a tool that everyone's familiar with. It took me a while myself. But yeah, these are just things we'll happily work through. Okay, while we're waiting for him, we had an interesting comment come in here from Marcus420. He said, one thing no one takes into account about Tesla Elon is a Republican. Well, he wasn't always. He's made that clear. More EV purchasers are Democrats or neutral, and the pendulum for EV support has swung out to its peak on this swing. Most average people think things have gone too far to the left, and there's a huge pushback coming. You can see that in Europe, where the farmers are revolting. In Canada, the truckers revolted. The tide is turning for now. So it's quite possible these down days of Tesla will become down years, unless their robotics takes off, possibly. It's just my opinion. Do I own Tesla income ETFs? Yes. Do I have any hope of share price appreciation in the near future? No. Well, here's the way I see Tesla. So I think Elon is a smart guy. I think Elon is going to figure things out long term. I wouldn't bet against it. I think that Tesla overall, I think the cars are good products. They're going to figure out ways to be able to do things where you don't have to wait so long to charge at home. They're working on different, more advanced charging stations, more advanced power sources and things like that. I do have a lot of faith in Tesla. I wouldn't consider myself an Elon fanboy. I definitely think he does, run his mouth a lot. He put a lot of effort into freeing up Twitter, and that also, that costs a lot of money too. And but long story short, I do have faith in Elon long term. And yeah, Tesla, of all of the former FANG, they called it FANG plus T, those have all recovered basically, except for Tesla. You look at Facebook, which is now Meta. Apple's still trading low. Actually, I think I have Apple at a bargain right now. Yeah, so I can read comments. I actually had to sign in on YouTube here, so I'll do some comments since I'm not able to put them up here. Well, let me. I'll actually do this. Let me migrate over here. We'll give this guy a few more minutes to figure things out, and if not, we'll just move on. Let's see. Orion says, "Can you read or comment on YouTube viewers too? A lot of people only watching YouTube." And then let's see. Create a note to describe that strategy. It would help a lot. Yeah, I asked him to do that. The last guy that was talking, he seems like he knows options well. Hey, if you want to unmute yourself again, who was it? That guy syndrome. If you want to unmute yourself, tell us what your experience in options is. It sounds like you've been trading well over 10 years or so in options. A lot of commenters like your ideas here. This boss man says this dude has some super good ideas. Let's see what other.
Hey, am I unmuted?
Yes, you are.
Just a little bit of background. I probably started trading futures in 2008, right around that housing crisis, market crash kind of thing.
How did that go?
That got me interested.
Yeah.
Started off making a little bit of money, but let's put it this way: I don't trade futures intraday anymore.
Okay.
It's just not worth the risk. It's not worth the time. It comes down to lifestyle. A lot of people think they can make a ton of money intraday trading, which potentially you can. But when you look at it, who wants to spend 8-9 hours in front of the computer every single day to have the big swings in your profit and loss? I say it all the time. I'd rather sit back and make 2% a month.
Mm-hmm.
How many people out there wish they can average 2% a month every single month for 5 years straight? If you can take back all the money people lost intraday trading, scalping, option this strategy, option that strategy, and if they just made 2% a month, how much more money would they have today if they did that for 5 years straight, kind of thing?
Yeah, so that's 24% a year. If you compound that over 5 years, that's phenomenal.
Yeah, that's my point. If you can safely consistently make 24% a year, do you really need to make more if you think about it?
Right.
How much more do you really want? At a certain point, it just becomes greedy,
Mm-hmm.
Back to this one guy's Redbirds over here. I posted a spread that filled, I think, 2 weeks ago on a Monday for this 40 credit. Now, the reason why it's 4 legs instead of 2 is the PSQ has, there's a wide range of the bid and ask for the options, but when you fill spreads, it gives you more like an average price. So the market maker will figure out what's best for the market maker, And usually a lot of these four-legged spreads only fill if you like pay up a little bit extra. I mean, you gotta pay the piper a little bit to get the position that you want. But you can see PSQ, when PSQ goes up, QQQs are gonna go down. So it's roughly a 1-to-1 inverse.
Right.
But if you look at the risk reward, the most I can make on the upside is $1,000.
Mm-hmm.
The most I can lose on the downside is maybe like 550, 600. So that means if QQQs go up about 15%, the most I'm going to lose on this is like $500 or $600. But if QQQs goes down the same percentage, I'm going to make more on a percentage base for the same percent move for the underlying QQQs. Now I beta weight my FEPI and PSQ to the QQQs. So whenever I'm looking at any risk analysis in Thinkorswim, which I think is one of the better ones for risk analysis with options, it's the reason why I still use it, I'll beta weight it to QQQ with the PSQ added in, and whatever VIX hedge that I have or any long-term Black Swan hedge that I have. But the whole idea is to put on an inverse ETF PSQ vertical that's bullish on once a month and roll it once a month. Now this position is part of another position, but I'm up in PSQ and I'm a little bit down in FEPI for the month, but it's going to pay out 2% in a couple of weeks, and when it does pay out, it's gonna supersede the losses on the actual shares itself in FEPI. And it's not going to work for every underlying, because when you start to do at the money verticals on a lot of stocks, you're going to get that 1-to-1 risk reward.
Right.
With PSQ, since it's inverse, it has weird options on an inverse ETF, and at the money vertical has more reward for the upside than it's going to have for the downside. And if PSQ is going down, that means QQQs are going up, and that means my FEPI's going up. You know what I mean?
Right.
And if FEPI's going up, it's gravy. But it comes down to balancing the quantity for the hedge to the number of shares. Now, I think six contracts of this would be about 200 shares of FEPI. You just got to kind of look at it and look at the risk reward and figure out how much deltas you want to hedge. You can put in less contracts and you'll be more bullish. You can put in more contracts and you'll be more bearish. So you can, in theory, kind of play the swings of the market. If you look at the QQQ chart and you say to yourself, "Oh my God, it's way overbought," but you don't want to exit your cover call ETF shares to trim position size. What you can do when you roll this spread each month, you can just add another contract to it. So you'll be more negative deltas. So you'll be more directionally bearish with the extra contracts on the hedge. So all you have to do is adjust the contract size per month, and you can literally be a little bit bearish or a little bit bullish on your QQQ position. I mean, obviously, a lot of the goal is to keep adding every single month, every 2 weeks. The studies that I've seen on dollar cost average, and you can buy every single down day, you can buy every single down week. It's not really going to outperform if you just bought every 2 weeks. A fixed amount of volume, you bought every 2 weeks. It's like mentally you think buying every down day, you're going to make more money. But when it comes to IWM, SPY, or QQQs for the past 20 years, all you're doing if you're paying commissions, you just waste the commissions. But if you just bought every 2 weeks, it's going to perform the same or better than if you bought every single down day. So people don't have to worry about, oh my God, it's a down day. I gotta loan out money. I gotta max out the credit card, etc., etc. If you get paid every 2 weeks from your normal job, just send a little bit of money of that to your trade account and just buy the cover call ETF of your choice. My choice is FEPI for several reasons. It appreciates when QQQs goes up, which that's a bonus. It doesn't depreciate all the time, no matter what, in a bull market. It pays a good dividend per month, and it pays enough that I can use some of that dividend money to hedge for Black Swan events. I mean, it doesn't really get better than that.
That's awesome. Yeah, we got a lot of commenters that would definitely like to see you. If you could post some of this in some of the sub-threads, it would be really educational.
Yeah, I'll have to dig around on the Discord. I mean, I hate the navigation of Discord. I think it's so counterintuitive. It's just
Yeah, it kind of is.
unless you like unless you live in Discord,
Mhm.
you gotta kind of figure it out over time.
It took me like 6 months to realize, not only was it a great tool, but you can actually do a live show on here and interact over voice chat with people. I think it's actually a great tool, but it just takes time to learn for sure. Like options.
Yeah,
Yep. All right, I think that this other
and I
person.
mean,
Oh, sorry. Yeah. Yeah, go.
when it comes to option, there's a million different strategies you can do. You can learn this, learn that, flip flop on this, flip flop on that. Generally, selling premium, I think, has a higher probability of, you can make money better selling premium than you can buying.
Yeah, I've heard
Some people
that.
get really lucky with buying calls, like buying calls out of the money. There's so many ways to make money in the stock market, but I think if you can outlast the drawdown events that are 15% down, 10% down, 25% down once every few years, if you can find a way to just last through those events, you're in the game longer. The longer you stay in the game, the chances of you making money long term is pretty good. And in my eyes, if you can hedge 10% down a month, relatively free, and you can still collect your 2% dividend on your entire portfolio, I think that's a win-win. You don't really have to do much else. I mean, at a certain point, if that's good enough, you don't have to learn anything else.
Right.
You just got to stay narrow focused on the strategy that you're doing and you're committed with. If you're committed in owning Tesla and you're down right now, it's tough to just give up and sell the whole thing. You can probably, people that own Tesla and just Tesla, if you just last long enough, you can probably at least get your money back at a certain point,
For sure, yeah.
And it does pay a high distribution, but most people don't need the distribution in their life yet. They're not at that retirement. They don't need it for bills kind of thing. And if you don't need money for bills every single month, you're basically doing a growth strategy. You might as well put your money in things that just grow, like QQQs or SPY, things like that. One of the reasons why I like a covered call ETF is it can possibly potentially make money when the market goes sideways, goes up, maybe even slightly down. That's one of the advantages of selling covered calls. Just long stock is purely dependent on the share price going up. The stock can go in three directions: up, sideways, or down. If I'm in a covered call ETF or a covered call strategy that's relatively diverse, I diversify my avenues of making money. I can make money in different market environments, which I'm willing to give up a little bit of upside potential for the ability to make money in different market environments. Because who's to say that the market's just going to keep going up forever, Just long stock is only going to make money in one direction. And that, to me, is a scenario that I don't really want long term. I'd rather have the ability to make money sideways, bullish market, or maybe even a slightly bearish market. And options is kind of the only real way to do that. Yeah, I suppose dividends can pay, per quarter, per month kind of thing. But with these new cover call ETFs, you can do an option strategy without doing the options. So it's just a simplified version. And FEPI owns a lot of the stocks that I would want to do cover calls on to begin with,
All right, I think, let's see, are you able to speak, Gajen?
Can you hear me now?
Yes, I hear you perfectly. Awesome.
Oh, god damn, this thing drives me nuts. Anyway, I'm sort of a Neanderthal. To continue what I was messaging you with directly.
I was going to say it's okay to
watching-
be... Wait a minute. I was just going to say it's okay to be a Neanderthal, because in that Discord, according to some people, apparently I am, too. So, yeah, go ahead. Yeah.
But your interview with Jay was really helpful for me. I'll tell you what, YieldMax, to me, is nothing but a bunch of unacceptable compromises. Now, I get the idea, but it's got the highest fees. And then you've got this, well, right now it's Tesla dragging at the ankle.
Mm-hmm.
And then the guys doing the wheel strategy, nothing against them, but I'll tell you what, they're either going to have to. I mean, YieldMax doesn't care if the dividend's diluted because to them, customer is a customer. Whether they're on the wheel strategy, whether they're just diving in for the dividend, you know, it, they don't care either way, I think. But to me, the ulti strategy, because it's kind of so aggressive, sort of scares half-hearted people off, I think.
Mm-hmm. Yeah, true.
But potentially, and what I really like about it is that they do the rebalancing and that they can do a qualitative analysis based on success or failure and move on.
Mm-hmm.
And like Jay said, they make more trades with ulti than all the other ones combined. That's kind of the light on your foot approach, I think, is going to serve them well.
Yeah. So, what other YieldMax funds do you have, or you just have that one?
So this is what's interesting. I started YieldMax originally with Tesla, but as Tesla, the parent, started to have their doldrums, I ended up DCAing down to make myself neutral. And by then I had bought into Coney. And to me, Coney's been a nonstop winner. I mean, my cost basis on entering Coney was like 19 something. And, I'm the kind of person who forwards the dividend using my own cash and DCAs consistently. So I'm not restricted, to wait until I have more money. I just, as a matter of course, if I'm going to get $2,000 from Coney, well, of course, I'm going to buy it on X date with my cash, and it's just forwarded. It's not a problem. But in terms of so I'm loaded with Coney. I did a cannonball into the deep end with Misty, and that thing is just it's a nuke. I mean, I can't wait to see what that first dividend is going to be like. That thing's incredible.
Yeah, it's phenomenal. They've launched at like the perfect time.
Yeah, I mean, I just wanted to so I'm an old Neanderthal, old dog. You think old dogs can't learn new tricks?
Yeah.
I used to distrust anything Bitcoin.
Yeah.
I mean, to me, Bitcoin was made so ISIS could sell their oil, right? And cocaine dealers could use it. But guys like Tom Lee, pointed out that, hey, pirates were the first ones to use gold as a carrier of value, and they didn't trust anybody. So using that frame of mind, Coney's the one that weaned me into Bitcoin, which I'm in like up to the neck. And my liquidity, I use FTB, I use the Fidelity, because I'm big in Fidelity. I love Fidelity.
Yeah, they're a great one.
For those of you out there, I don't know if your listeners know this. Fidelity is not owned by a bank. It's the only investment house that banks don't have their claws in. It's the Johnson family. And a side product of that is, I heard somebody talking about electric cars and political this and that. They're non-ESG. They're non-DEI. They'll sell you all the oil you want. And so, but I do the Fidelity Bitcoin ETF, no fees. The volume is almost as good as BlackRock, but Coney and YieldMax and all their Bitcoin related ETFs is what really convinced me just how profitable this was. Even though it was indirect. And so now, like I told you, I pointed out in the message, I have an aggression fund, okay? And that's aggressive derivative type funds like YieldMax, and that's its job. It's only 10% of my overall portfolio, but it's very significant. And like I told you, I love doing things in scale. You really can't appreciate this whole investing journey of mine. I'm one of these traditional passive type investors, but I pick good companies. I had the Nvidia, I have the Avgo, Costco, Lockheed Martin, General Dynamics. I'll tell you what, when that war in Ukraine came out, oh my Lord, I bought all that stuff up because I knew it was going to happen.
Yeah. Oh, really? So you scooped up a lot of like defense stocks?
Yeah, and that was in my bigger, what I call my more. I'm not even going to use the word more stable because it's really not fair. I mean, these YieldMax funds. I poke fun at the SCHD crowd.
Mm-hmm.
Okay, to me, SCHD is the moniker of cowardice, and it's the moniker of the old guard that would take your money, not give you jack squat, right? So imagine if all you did was take $1 million, use all the research that Schwab has put into SHD, buy a mirror image of the same tickers, and just invest it yourself. You're gonna kill their results.
Yeah.
I mean, but YieldMax has opened up this whole new. I mean, I know these other funds can't stand it because of the yields and just the results that are being given.
Mm-hmm.
It's unmistakable. It's Tesla, big exception, but it's, once again, I'm a picker. One of my favorite people on YouTube is that Bowtie Nation guy.
Oh yeah, that's Joseph.
He's got a
Hogue.
lot of good things to.
Yep.
Yeah, he's got a lot of good things to teach, like, people about just knowing the companies, what they're involved with, knowing what you're getting into.
Mm-hmm.
Like, I don't know if your watchers know Misty. I watched their CFO on CNBC, or MSTR. So MicroStrategies, they're buying all this Bitcoin because they are bringing to the whole world a system by which value can be added to commerce in business. So in other words, delivering the value on, because a lot of people gripe about Bitcoin, like, I can't use it,
Yeah.
Well, that's the whole point of MicroStrategy, and that's why it's skyrocketing, because nobody's done that.
Mm-hmm.
And it's, yeah, I don't know. I'm kind of, now that I actually turned my phone on, I'm dominating. But your previous guest, it sounds like he has a lot of experience.
Absolutely.
I'm kind of simple. My version of swing trading is acting on good intel, anywhere from 3 to 5 days, 3 to 5 weeks, 3 to 5 months, but valued stocks. Like, I was on all the recent Nvidia peaks, where they had that nice dip where they were way down around 750, and you sold it out at 950. And the scale is you buy $250,000 and you sell out at 950, and it's like kabam. Oh, and the kicker is, I'm an old dog. It's in a Roth IRA.
Yeah.
So Joe Biden can go F himself, so.
You don't think they want to change Roths?
Yeah, I mean, no, not really, because in fairness, most of the investment houses are what and I'm a right winger, just because of what I've done all my life and my background. But
yeah, that's fair.
When it comes to investing, let's face it, BlackRock is a gigantic ESG. That's where the Democratic Party gets all their money from.
Oh, from BlackRock?
I mean,
I've heard stories. Yeah.
What's that?
I've heard stories about it, like with Ukraine and all that.
Oh, yeah. I mean, there's some obvious things. And when it comes to money, the last segregation in the world will be money, right? You have everyone talking about, like, racism and all that crap. But in the end, the rich and the poor is going to be always divided. And we all know that. So money is, in its own weird way, a common denominator. And so there's many Americans that love that Roth IRA, and I do not think that they would allow them to mess with any of that. You know,
Right.
the HSA, Roth IRA. I mean, that's where that's where you'll make your first $1 million if you do it right and you trade aggressively. Is a Roth IRA.
Mm-hmm.
And then you won't have to worry about doing backdoor Roths to get out of minimum distributions.
Mm-hmm.
But anyway, I appreciate you hanging in there and letting me get on and share my thoughts. But yeah, to me, Ulti, I'm really interested to see what a full month of trading will do. And like I said, I think the first Coney manager who knocked it out of the park.
Mm-hmm.
I'm just saying that. I think that's his Ulti manager. It's got to be his best guy. I mean, because it's all the activity that goes along with it.
It makes sense, yeah, certainly. Well, good
But
chatting
anyway,
with you.
but yeah, I'll back off and let someone else take up the mic. But I've been watching your videos for a while, actually.
Oh yeah. Like
yeah, and YouTube, other than Hogue and doing some and CNBC and
mm-hmm.
you know.
I just joined. Yeah, go ahead.
I was just saying, there's been a couple people, and then the consummate positive glass full thinker, that big Tesla guy,
Mm-hmm.
Michael. I watch him a lot, and he's got a lot of good just macro information, believe it or not, even though all he talks about is Tesla.
Yeah.
But
how did you find my channel, though?
Yeah. Well, actually, because I was into watching Hogue and the financial videos, it threw you up there.
Oh,
I mean,
cool.
This AI or whatever it is,
the algorithm.
YouTube is a great venue. It just leaves it up to the person to pick out who their subject matter is.
Right. Yeah, I saw you, and so I just joined the Retire on Dividends Discord today, and that's where I met you.
Yeah, absolutely. And then the Retire on Dividends, he just cracks me up. That guy every morning.
Yeah.
He's always griping about the fund managers, and I think to myself, dude, you couldn't do any better.
Yeah.
Knock it off. I mean, this is so, it's more about who they know and what they know than any kind of skill, right?
Mm-hmm.
It's like there must be so much background information that goes into this stuff.
For sure.
It's way beyond just analytics. It's relationships. It's that information that just floats around of knowing what's going on and then being able to act on it in a timely manner.
Mm-hmm.
But anyway, I'm going to get off of here, and I'll be jumping back and forth because you guys are covering, the overlap, and dovetail is pretty obvious on there.
Yeah, awesome. Yeah, I'm going to make this a regular thing on Discord, so yeah, feel free to join back. We let everyone on here talk. So yeah.
Yeah, I do, but I'm loving it, dude. I just retired January 5th.
Oh, congrats.
And when I say the Eagle shit on me, it shit on me. Mm-hmm. I mean, when I was telling you I like moving in volume, oh yeah.
Mm-hmm. That's awesome.
In this atmosphere now, everyone's always talking about how terrible the economy is.
Mm-hmm.
I disagree. If you're in the market and you've been doing well and you've been being aggressive and making your picks, yeah.
100%.
It's awesome.
Yep.
It's awesome.
Mm-hmm. 100%.
Here, I want to leave your viewers with one story.
Okay.
So they can crack up.
Sure.
Because it's kind of like the little guy getting over on the big guy. So when I joined the institution I was with, let's call it that, people used to use their sick time like time off.
Mm-hmm.
So, yeah, and you know who they are, these middle managers, these little butt-kissing things coming up with ideas. Somebody came up with the idea that sick time should be cumulative. that you should only get 1 day a month.
Hmm.
And they said, yeah, that sounds like a good idea. The problem was in legalese, when they did that, that time became yours. So flash forward 36 and a half years, and you're talking to a guy who's never taken a sick minute in his entire career.
Wow.
Now, think about this. To think about the hourly wage 36 and a half years ago. And yet, when it came time to pay out, they had to pay me out in my maximum earning. So what happened was, they ended up having to pay me $200,000 just for sick time.
Wow. What company
So
was this?
with that, it wasn't a company, right?
Yeah.
It wasn't a private company. It was city government. Okay.
Oh, okay.
It's because, and they tried to get me to go out of it. Oh, we'll give you $10,000 and you can have the new sick time 90 days. I said, go fly a kite.
Wow. So you worked for
But
like
anyway,
a city.
and I told all my friends I'm going to retire.
Mm-hmm.
I deferred the maximum out of that $200,000 that I could, maxed out my HSA, and I ordered a Mazda CX-90 plug-in hybrid built in Hiroshima, Japan. Right?
Mm-hmm.
Paid cash for it. Threw a cashier's check at the finance guy. You should have seen the look on his face.
Oh, a cashier's check for your sick time?
Yeah. Oh, yeah. So the whole $200,000 was given to me, deferred like $54,000. I think I was allowed to. Paid off that $60,000 vehicle, and I still had like 30 whatever grand that I put in my taxable brokerage. Right?
Yeah.
So I mean, wow. But yeah, that's the story. So yeah, the little guy. Oh, I just gave it to him. Oh my goodness.
Nice.
But anyway, hey, but once again, kudos on your interview with Jay. Every time I listen to that guy, he instills confidence in the integrity of his fund, and then obviously his knowledge and where he's going with this stuff.
Mm-hmm. For sure.
But anyway.
Yeah. All right. Well, great talking to you, and that's going to conclude the show. So,
hey, good talking.
You too. Take care. Bye. All right, everyone. Thank you for tuning in. Like, comment, and subscribe, and join the Discord if you haven't already. And we will see you all on the next one. Take care.